Investment advisory services offered through Alpha Star Capital Management, LLC, an SEC-registered investment advisor. Alpha Star Capital Management, LLC, and SWAN-Capital are independent entities.
What your money would say. Andrew McNair. Money Talks. Are you listening? Money Talks. Are you listening? Money Talks. Are you listening? What your money would say with Andrew McNair.
We're live here on What Your Money Would Say. I'm your host, Andrew McNair. And for the next 30 minutes, every Saturday from 12:30 to 1 o'clock, we'll be taking financial chickens and making them financial swans. On What Your Money Would Say, we believe a financial swan is someone that sleeps well at night. And as a retiree, you deserve to sleep well at night. That's why I named my wealth management firm SWAN-Capital, because I believe when you get to this point in life, it's a shame to worry about what the stock market's doing every day or worry about April 15th coming up. That's someone else's worries. And at SWAN-Capital, I tell my clients, it's your job to enjoy the pleasures of retirement and let me take care of the responsibilities of your retirement. And one of the topics that I find keeps a lot of retirees up at night is this low interest rate environment. They don't know where to go as a safe money alternative. They know they want their money safe and secure, and they know they don't want to risk it, but they don't want to be caught with these low interest rates. And I call it the CD treadmill. And it's where retirees come in, they're tired. They've been on this treadmill of going every 6 months to the bank saying, come on, guys, do you have something better than just this 1% CD? Well, you're in luck. On What Your Money Would Say today, the CD treadmill is our topic. And we're going to talk about a way where you can get better than 1% yields, because I'm sure you're tired of them. But before we do that, I want to share with you an upcoming event that we have here in the SWAN-Capital community. And that is our Veteran Aid and Attendance Workshop, where we're going to share with families how to receive up to $25,000 a year tax-free from the VA to help offset assisted living, home health care, and nursing home expenses for wartime veterans and their spouses. So if you have an elder parent, maybe a father, maybe a mother, or maybe just a distant uncle that you care about that's in one of these communities here in Pensacola, and you're saying, I don't know how they're affording it, and they're spending down their assets, and it's just a matter of time until they're going to have to come back and stay with me, it's your time to come to this workshop. It's going to be at the Sterling House on University Parkway, and it's going to be on the 24th of February, and it's going to be at 6 o'clock. And for 30 minutes, there's going to be some refreshments there, but more importantly, I'll be speaking there and telling you how these benefits work and if you're eligible or not. So you don't want to miss this workshop at Sterling House on the 24th at 6 o'clock. And if you want to find out some more information, go to our website at swan-capital.com. That's swan like the bird, -capital.com. And while you're there, sign up for our weekly market update so you can sound like the smartest guy in the room because you're getting our weekly market update. And while you're there, follow us on Twitter, like us on Facebook so you can stay social and stay connected to us. Now, today's topic is the CD treadmill. And again, so many families come into our office exhausted about this low interest rate environment and chasing all the glitter. And as you know, all that glitters is not gold. But we're going to share with you some safe alternatives. And the first one I want to share with you, where we've been actually placing lots of clients' assets in that have money in CDs, money markets, and checking accounts, is into an alternative where it's called a linked account. It's our secondary cash position that we specialize at SWAN-Capital. It's a place where you can get a guaranteed 2% interest rate, which is double more than what the current CD rates are doing. And you get what they call their toaster. You know, back when the banks gave you a toaster, they give you 10% up front. That's right, 10% up front. So if you stick $100,000 into this linked account, you get $110,000 and a 2% rate on top of that with no market risk. You want to find out more? Call our office, 380-9558. That's 380-9558. But for the rest of the show, we'll come back to that alternative, but I'm going to share with you what are some other alternatives, and we're going to talk about the 3 investment worlds. So we got a lot to talk about, so stay tuned. But the main theme of today's show on the CD Treadmill is that SWAN-Capital, and What Your Money Would Say, wants to help you get off your assets. We want to help you get off your non-earning assets and take those assets and place it in a place where you feel secure, but you also feel proud about the return you're receiving. And we're going to talk about how to do that. And why do I beat up CDs like a piñata? Well, I just become frustrated with seeing banks make so much money off my clients. Banks will give you 1%, a 0.5% if you're lucky and they like you, while they go out the back door to Joe, Dick, and Harry and give it out at 4%. So they take that 3% spread, which are, I don't even know what the calculation on that. That's like a 300+% rate of return. And then they go take that money and loan it up 10 times on your deposit. So they're making lots of money off your money. And you're saying, well, I don't get a piece of that. Now, you might be in a credit union, but they're doing the same thing to you. So don't feel like just because I'm a member, you're getting all those interest rates. No, the CEO and all the employees are getting the money. So you don't have to be stuck with CDs, money markets, and savings account. There's lots of options for your safe money. So if you're just tuning in to What Your Money Would Say, we're talking about the CD Treadmill. We're talking about ways to get off this path of just continually trying to better yourself, but getting nowhere. And CDs is not the place where your money should be. We joke at the office that we call them GBS accounts, going broke safely. So you feel good that your money is safe. Your money is default risk-free. It really is. More than likely, your bank's not going out of business unless it's 2008 or 1929, which it does happen. But supposedly the government will come and save you. But so your money is default risk-free. However, your money is not protected from purchasing power risk, or what I call the I word, inflation, the silent tax, the tax that's continually drawing money out of your pocket, and you don't even realize it. You don't even know about it. And we all have felt inflation. Do you remember what the lowest price of gas per gallon is in your lifetime? Do you remember? I haven't lived that long, so I remember that it's $1.19. You probably remember when it was 50 cents or below potentially. So you've experienced inflation if you've watched gas prices over the last 12, 15 years. You've probably experienced it when you buy a gallon of milk when it's $3, and you remember when it, maybe someone delivered it and it darn sure wasn't $3 a gallon. So it's frustrating to see inflation erode the money that we've worked so hard for. And who really suffers the most from this is retirees. Retirees can't go back to work. They can't get their raise of 3-5%. They're stuck on fixed income, or they're stuck with their Social Security payment getting 1.5% increase this year. Like that really helped. So what do? Well, you look for alternatives where you don't, try to chase the next return every 6 months. You look for an alternative that can give you a solid return, like the one we just talked about, where you can get a guaranteed 2% on your money and get an upfront 10%, like a free toaster at the bank that they give you for giving them, a portion of your safe money. So if you stuck $100,000 into this linked account that we're sharing with you today, you would start off with $110,000 and get a guaranteed 2% on that amount. And guess what? Those are tax-deferred earnings. And we're going to talk about how CDs are very inefficient. But I want you to understand that inflation has to do with the CPI, the Consumer Price Index. Basically, all that is a term that explains that every year they take a basket of goods and they compare it to every year, and you watch prices continually increase. And I'm not really that fascinated with the CPI, the Consumer Price Index, because it's a false number. There's a lot of misconceptions that go along with the CPI. I try to tell my retiree clients to focus on the PPI, the Personal Price Index, because just because Joe is buying, lotion and conditioner for his hair, but you're spending your money on traveling expenses, health care, and leisure activities, and it's not going up 3 or 4%, it's going up 5 to 6%. So if you're invested in CDs earning 1%, you're going backwards way faster than you're going forwards. So again, that's why we look into alternatives like the linked account. And if you want to find out more information about that alternative, give our office a call at 380-9558. That's 380-9558. Now, so if you're tuning in to What Your Money Would Say, we're talking about the CD Treadmill. And the CD Treadmill is talking about all the problems that can affect a retiree if you're invested solely with your safe money in CDs. Another thing I want to talk about is how risky CDs are. Again, they're not default risk. They're default risk-free, but they do have purchasing power risk. But more importantly, and I have a really big discussion, and it's a harder discussion, with my clients that are 80 and above. If your money is in checking accounts, CDs, or savings, that money is not a protected asset class in the state of Florida. What does that mean? That legal mumbo jumbo means that if your money's in checking account, CDs, savings, and you get in a car accident or someone slips on your asphalt, and even if it's not your fault, but somebody in court, cries wolf and blames it on you, that those assets are going to be easy pickings for attorneys if you don't have the right insurance coverage and you don't have your assets protected properly. So that's why we look at asset classes that are protected, like real estate, your home, annuities, life insurance, your IRAs and 401ks. Those are protected asset classes. See, the court looks at those as potential retirement accounts that you're going to use for retirement purposes to make sure that nobody just comes in, some ambulance chaser, and takes that money from you and your spouse in retirement. But if your money is in CD savings and money market accounts, your money is not protected from those wolves out there. So in just a few minutes, we're going to come back and we're going to beat up CDs like piñatas again, and we're going to talk about, again, some other alternatives. There's 3 investment worlds that you need to know about. So we're going to talk about Wall Street, banks, and the insurance companies in just a few seconds.
Today's financial landscape can be rough. One of the most important aspects of planning is choosing the right guide to help you navigate the road to retirement. Andrew McNair and the team at SWAN-Capital is dedicated to providing the very best service in the retirement planning industry today. SWAN-Capital is a full-service independent wealth management firm dedicated to providing guaranteed custom income plans that you cannot outlive. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. The difference between SWAN-Capital and you retire once. We help people retire every day. You should be enjoying your retirement years, not letting worry keep you up at night. SWAN-Capital. Sleep well at night. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. Again, that's 850-380-9558.
The Veteran Benefit Project, founded by Andrew McNair, president of SWAN-Capital, is a nonprofit organization dedicated to helping veterans and widows of veterans with long-term care expenses by qualifying for the VA's Aid and Attendance Benefit. Learn how to receive over $24,000 per year from the VA towards long-term health care. There is absolutely no fee associated with our assistance to the veteran, the widow of a veteran, their families, or any retirement community. Our goal is to preserve the dignity of the veteran and to reduce the dependency on the Medicaid system. Again, learn how to receive over $24,000 per year from the VA. Contact the Veteran Benefit Project 850-380-5137. That's 850-380-5137. 850-380-5137. Look us up on the web, myveteranbenefit.com. At the Veteran Benefit Project, we are committed to helping you secure the benefits you deserve.
Welcome back to What Your Money Would Say. I'm your host, Andrew McNair, and today's topic is the CD Treadmill. But I want to remind you, if you're just tuning in, about a workshop that you don't want to miss next week, and that is our Veteran Aid and Attendance Workshop, where we're going to share with families how to receive up to $25,000 a year from the VA. So if you have a loved one that's in assisted living, or maybe living with you, or receiving home health care, or lives in a nursing home, they could be potentially eligible for up to $25,000 if they're a wartime veteran, at least for 90 days. They didn't have to see combat. They didn't have to know what a machine gun looks like. They just had to serve during a wartime period, and they could be eligible for up to $25,000. You don't want to miss the workshop at Sterling House on the 24th at 6 o'clock. That's the Sterling House on University Parkway on the 24th at 6 o'clock. And you'll see me and the people there at the Sterling House, and we'll share with you how the benefit works and how it can help your loved one. Again, the Sterling House, you don't have to be a resident there to show up. It's open to the public. So we'll see you there. Now, back to our topic today, the CD treadmill. If you're a retiree, you know how hard it is to find some alternatives for your safe money. And I've witnessed, sadly, it's a bitter story, but I got into the industry of wealth management in 2005, and I witnessed so many families struggle in 2008 because not because they were in bad investments, but they were led to be in riskier investments than they should be. They were investing like they were 20 years younger. And like Warren Buffett says, you find out who's skinny dipping when the tide goes out. And so all those retirees, when they finally were caught skinny dipping, they took their money, what's left of their 401ks, their 201ks, and they moved it to safer alternatives and bought CDs and bought money markets. But they didn't have much shelter there because this low interest rate environment has really held us hostage in this low interest rate environment, and you can't keep up with inflation if we continue down that path. Another thing that I've really struggled with CDs and why I'm so passionate about taking those funds of retirees out of the banks and putting them in better alternatives is that CDs are not as liquid as the propaganda that is spread to us. You know, CDs are led to believe that they're liquid. However, if you ever need 5, maybe 10%, because most people never need to liquidate and have all the money to them, they just need maybe 5-10% to pay home insurance expenses because your house is paid off. Well, if you go to your $100,000 CD and ask for 5%, they're going to say, how about we liquidate this whole thing for you and we'll take all the interest that you should have made. And you're like, that's not a good deal. Well, there are alternatives. What if I could share with you an alternative where you could take out 10% every year, and if you didn't want the account anymore, you could walk away after year 3 with all your money with no penalties. And you get a guaranteed 10% up front with a guaranteed 2% on that amount. That's a linked account that SWAN-Capital specializes in. And if you want to find out more information, give our office a call at 380-9558. That's 380-9558. So if you're frustrated with CDs not being liquid enough, you're frustrated with them not making a good return, let's talk about what other investment worlds are out there. Well, Wall Street will push you to believe that says, hey, come put your money with us. We're going to put it in bonds, which are relatively safe. And really, bonds are not safe because they have no principal protection. But that's what we're led to believe. Now, I would have to say that Wall Street has higher returns than any other investment world. They're higher than banks. They're higher than insurance companies. And also, you can get some better diversification in Wall Street. But here's what you're giving up. For every give me, there's a gotcha when it comes to the investment world. With those higher returns and diversification, you put your money at risk. And as a retiree, I give the analogy like this. If you're on the 5-yard line, why would you throw a Hail Mary? It makes no sense. Why would you risk it at the finish line? And that's what you're doing if you place your money in bonds and in Wall Street. I hope you go to my website at swan-capital.com. That's swan-capital.com and sign up for our bond white paper. Our bond white paper talks about the potential bond bubble. If your money's in bonds, and if you understand how bonds work, you know that interest rates and bonds have an inverse relationship, which means that if interest rates continue to rise, bond prices will fall like a rock. And so we're at artificially low interest rates. You know, Ben Bernanke, who retired last month, pushed those interest rates down for so long. And if they bounce back to the 70s, the 80s, where interest rates were so high, you'll see mass, I won't say suicide, but you'll see mass people that are not happy with bond prices because they'll just get demolished. When it's sad because they were led to believe that they were safe investments when they truly really were not. So understand that for the higher returns that you're getting in Wall Street, you're going to get no principal protection that you would get at a bank or an insurance company. Now let's jump to the banks. Banks have really spread the marketing that they're ease of use. They have an office on every corner. You can always get your money as long as you don't, everyone tries to get their money, and then we have a bank run like we did in 1929 or in the 80s. But they're easy to get to. They're safe. The government says they put their stamp of approval for what it's worth and says, hey, your money's good here. Now, here's what you give up for that. You give up interest rates. The interest that you earn in bank, if it's a CD, a checking account, or a money market, is not going to keep up with inflation. But you feel good. That's why we call them GBS accounts, going broke safely. So you gotta weigh your cons here. The next one is the insurance world. The insurance world has some pros there too. The pro is they're taxed. A lot of their investments are tax deferred, which is great for tax efficiencies. There are some liquidities factors that are comparative to a CD. You're going to get better returns than banks. You're not going to get as good of returns as the Wall Street will give you, but you'll get better returns than the banks. Also, many of their accounts, like annuities and life insurance, are protected from lawsuits and creditors in the state of Florida. So that's a great benefit as well. Now, here are the cons. Again, for every pro, there's got to be a con. The cons is you don't have as much liquidity. You can't go to the counter of the insurance company on the corner and say, hey, I want my money today. It doesn't work that way. You have to wait a few days for them to send the money. You have to be careful to pick the right product. Just like you have to be in Wall Street, you don't want to pick the wrong product for your situation because it can really cost you. And also, you just want to make sure that you pick the right investment, because if you don't pick the right one, like if you pick a variable annuity, those do have market risks, so you got to be careful there. Let's talk about safety. We were talking about default risk in the first half of the show, but how safe are those three investment worlds? You know, we're led to believe that FDIC insurance is very safe. But let me share with you some inside secrets about FDIC insurance. Did you know that FDIC insurance, the government program for banks, it works the same ways for credit unions, is they don't keep all that money in reserve waiting for that bank to go out of business. If you have $100 that are protected by FDIC, they only have to keep $1 on deposit. And let's say that bank goes out of business, they don't give you all your money back. If you have $250,000, that's the limit for them to protect, and the bank goes out of business, did you know that they could pay out your money over 5 to 20 year period at 0% interest? That doesn't sound too good to me. So how secure really is FDIC insurance in your bank? It's something to really ponder. I give it this kind of analogy. If you go to the Wind Creek Casino or you go to Bellagio, really nice casinos, and they have $100 million out on the floor, $100 million in chips, how much money do you think they need to have in the vault? Well, probably somewhere near $100 million, because they don't know how much they're going to lose that night or make that night. Well, you would think that's how banks and investment companies work, but it'll really surprise you. Did you know that investment banks can leverage your money up to 30 times? So for easy math, if they had $100 million, they only have to keep $4 million in the vault. And you wonder why, companies like Smith Barney go out of business. It's those kind of situations that can really make a company suffer and go out of business. The next is banks. Did you know a bank can loan up your money up to 10 times? Bank of America loaned it up to about 9 times on average. So if you give them $100 million or $100,000, you'll get the principal. They would only have to keep $10 million on hand, only 10%. Now, insurance companies don't have to do that. Again, there's not a right, wrong investment world, but insurance companies only have to keep, it's about dollar for dollar on their capital surplus ratio that they have to keep. So something to keep in mind when you're talking about default risk. You want to make sure that your money is as protected as you think it really is. Now, let's go back to what alternatives do you have. The three investment worlds are this. You have Wall Street, which has higher return, but you have no principal protection. You have banks, which money is easy and as liquid as it could be, but you're not going to get a return, and you're going to go backwards. You're on the CD treadmill, feeling like you're bettering yourself with these interest rates, but you're really not going anywhere. And then you have the insurance companies, which you have to make sure that you have the right product for your situation, offer a better return, but you do give up some liquidity. And you got to weigh your options there. But if you're investing currently in a CD, what if I could share with you an alternative? How about an alternative where you could get 2% guaranteed interest rate, which is double most CDs right now. And you could get a guaranteed 10% up front, which is basically like 10 years of interest in a CD. So if you put $100,000, you would get $110,000 and 2% on that amount. The money is tax deferred, means that you don't have to pay taxes every year. It's not a taxable account like the CD where you get the 1099 every year. It's tax deferred on the distributions, means you only have to pay taxes when you pull the money out. The money's a protected asset class. Means if you get in a car accident, someone sues you, that money is held protected from lawsuits and creditors and adds that extra layer of protection for you. Also, the money's liquid. Let's say you wanted to get money out of your CD, just 5-10%. Well, with this account, you don't have to liquidate it like the CD. You can take up to 10% every year. And if you want to walk away after year 3, you can take all your money out, no questions asked, no penalties. I know you think it may sound too good to be true. Call SWAN-Capital. We'll sit down for 30 minutes, and I'll share with you how this alternative works. And then it'll be your decision if you want to move forward or not. Call us at 850-380-9558. That's 380-9558. And we'll see you in just a few minutes. We'll take a quick commercial break.
Today's financial landscape can be rough. One of the most important aspects of planning is choosing the right guide to help you navigate the road to retirement. Andrew McNair and the team at SWAN-Capital is dedicated to providing the very best service in the retirement planning industry today. SWAN-Capital is a full-service independent wealth management firm dedicated to providing guaranteed custom income plans that you cannot outlive. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. The difference between SWAN-Capital and you retire once. We help people retire every day. You should be enjoying your retirement years, not letting worry keep you up at night. SWAN-Capital. Sleep well at night. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. Again, that's 850-380-9558.
The Veteran Benefit Project, founded by Andrew McNair, president of SWAN-Capital, is a nonprofit organization dedicated to helping veterans and widows of veterans with long-term care expenses by qualifying for the VA's Aid and Attendance Benefit. Learn how to receive over $24,000 per year from the VA towards long-term health care. There is absolutely no fee associated with our assistance to the veteran, the widow of a veteran, their families, or any retirement community. Our goal is to preserve the dignity of the veteran and to reduce the dependency on the Medicaid system. Again, learn how to receive over $24,000 per year from the VA. Contact the Veteran Benefit Project 850-380-5137. That's 850-380-5137. 850-380-5137. Look us up on the web, myveteranbenefit.com. At the Veteran Benefit Project, we are committed to helping you secure the benefits you deserve.
Welcome back to What Your Money Would Say. If you're just tuning into our show, we're at the end. But today was about the CD treadmill. We're talking to retirees that are exhausted about this low interest rate environment or tired of these low CD rates. And we talked about an alternative. That if you're tired of the illiquidity of the CDs, tired of, maybe taking a 5%, 10% out of your CD and having to pay back all the interest, you're tired of the 1% interest rates and you're wanting a higher return. Maybe you're tired of paying taxes every year on your CD. Your alternative is to call SWAN-Capital so we can share with you about an alternative where you can get 10% up front and a guaranteed 2%. I also want to share with you, again, our SWAN-Capital community event, the Veteran Aid and Attendance Workshop, that we're having at Sterling House on the 24th next week at 6 o'clock. If you want to find out some more information about that, go to swan-capital.com. That's swan-capital.com and find out more information about that event or call our office at 380-9558. I look forward to seeing you next time on What Your Money Would Say.